2006, when the seat was vacated by the incumbent, and later went on to win election to fill the unexpired term, plus 4 more terms. So his current term expires in 2023. He's a native of New Orleans, graduated from Jesuit High School, University of New Orleans, and Loyola School of Law. And before he became Commissioner of Insurance, he served in several leadership positions within the department, including Chief Deputy Commissioner and Executive Counsel. In 2013, he was elected President of the National Association of Insurance Commissioners, and he currently serves as Chairman of the Surplus Lines Task Force for the group and on its Executive Committee. In addition to his public service as an elected official, he served 33 years in the Louisiana Army National Guard, from which he retired with the rank of Colonel and received the prestigious Legion of Merit Medal. Please help me welcome Insurance Commissioner Jim Donelon.
Thank you very much for that kind introduction and for the invitation by the club for me to be here today. I had been offered the opportunity last month when someone had to cancel at the last minute, and then the meeting was canceled, and so I didn't get to do it back then. And that's probably fortuitous from my perspective, because much is happening in this ongoing crisis that we are truly in the midst of in the insurance area. And so I, this morning, reached out to the governor and will follow up with my request to him to address this crisis by hosting a meeting, allowing a meeting, I should say, for himself and myself and Chairman Talbot and Chairman Huval, who I spoke with over the weekend. Actually had lunch with Chairman Talbot and then reached out to Chairman Huval to ask them to request of their leadership, Senator Cortez and President Cortez and Speaker Schexnayder, to join with us when we would have an opportunity to meet with the governor or meet with us separately. Problem is, it's August, and everybody is getting their last week of vacation in. So putting even the otherwise busy schedules of the governor, the President of the Senate, the Speaker of the House, and the chairs of the 2 committees together will be a daunting task. But in this new era of remote meetings, virtual meetings, Zoom meetings, maybe we can make it happen that way, if not in a face-to-face meeting. But before I get into the purpose of our ask of the governor, let me run quickly through what I consider to be a very, very successful legislative session. And it was successful primarily because, as they tell the freshman incoming medical students, the first lesson to learn in medical school is do no harm. And I do believe the legislature accomplished that. And that's not always that easy to do. The best of intentions can go awry. I'll go into a little more detail about one of the bills that I'm pleased we were able to pass, and did so, of course, with the best of intentions, but I'll touch on how it is having negative consequences to our ongoing crisis in a few minutes when I get to it. The first bill that I testified, in my opinion, the most important of the session was by Senator Bowie of New Orleans, now Act 69, to require a higher level of capital and surplus for companies seeking or holding licenses to sell residential insurance, property insurance in our state. And frankly, that bill was copied from our friends in Florida, who did a similar piece of legislation here about 4 or 5 years ago. Up until now, and that bill has not yet been passed, signed into law, I don't believe, but it's any day now if it has not already been signed. Up until that bill passed and gets signed into law, the requirement was that you had to have $3 million of cash available. Frankly, without authority, we have for years been requiring $6 million by virtue of what is known in the regulatory world as a desk rule. And the companies rail against desk rules for good reason in the nationwide 51 jurisdictions that regulate insurance at the state level because of the uncertainty that comes with that. But this one was widely accepted, and the practice was in place for actually before my taking office some 16 years ago. Florida had a $2 million statutory requirement that legislatively 4 or 5 years ago they raised to $15 million. Did so in 2 steps, 3 steps actually. For new companies, instant requirement of the $15 million of capital and surplus availability. For existing companies, 5 years to get to 10 million and 5 more years to get to 15. Our requirement went from 3 million to 10 million for new companies applying to do business in our state. And for those here, 5 years to get to 5 and 10 years to get to 10. All of our companies are at the 5. Actually, our desk rule required 6 million of a new company when they came to our state. And the purpose of that is not to get the $10 million on the table for protection of policyholders and the state, the ultimate guarantor of failed companies. The purpose of it is for the ownership to have more skin in the game, as I call it. When they go to the reinsurance marketplace, which all of these small regional carriers have to depend on, they would be more motivated to be cautious, to buy insurance on a conservative basis rather than what obviously happened in the aftermath, in the lead up to Ida, when 6 companies inadequately reinsured themselves for the level of devastation that came their way with Hurricane Ida. So having that additional capital and surplus on the table is hopefully going to motivate companies to buy conservatively and more reinsurance as they take on our extraordinarily high risk of coastal exposure. You will also remember, and actually Representative Schlegel of River Ridge introduced, actually not River Ridge, of Metairie, introduced and passed the bill to its Act 434 now to put into law the requirement that I had a disagreement with a few, primarily State Farm and Farm Bureau, over evacuation expenses leaving parishes that did not declare a mandatory evacuation. That came to the fore actually shortly after Ida came through the metropolitan New Orleans area, and frankly after making landfall in Lafourche Parish at Port Fourchon. And we learned that in the lead up, the short lead up to making landfall with 150-mile-an-hour winds, several of the parish presidents, St. Bernard, Orleans, Jefferson, St. John the Baptist, did not order mandatory or any, in most cases, evacuation orders. Jefferson did a South Jefferson evacuation order, but the others did not. All of them did that based on their judgment of the way to best protect the life and safety of their constituents, totally unaware of the implications, the insurance implications, I'm sure. But even if they were aware of it, I don't want them to make those decisions based upon whether their constituents have evacuation expense coverage with their homeowners insurance or not. I want that decision to be made, as I believe it was, by those who did order an evacuation, Assumption, Terrebonne, Lafourche, St. Charles Parish, and those who did not. And those who did not were prudent in that judgment, in my opinion, because even as it turned out, without the big ones of Jefferson and Orleans ordering an evacuation, there was significant challenge on Saturday before the Sunday landfall by Ida of getting on the roads and out and through the traffic that resulted from folks attempting to evacuate and get out of the harm that that Ida posed. Ida developed into that threat late on Friday evening. In fact, as I spoke in this room to Rotary, Baton Rouge Rotary, almost 6 or 8 months ago, I made the point that in Baton Rouge and in New Orleans and in Jefferson and the other parishes, school was in and did not let out early on Friday until 3 o'clock that evening, because the threat was not recognized to be as grave and as serious as it turned out to be later that evening and the rest of the weekend. That bill that has been passed now, although we lost at the Division of Administrative Law to a DAL judge who opined when he ruled against me in a case that I knew was a close call. But I knew also that in the immediate aftermath, I had gotten an email from a lobbyist for Allstate Insurance Company telling me that Allstate was going to voluntarily waive the requirement of an evacuation order contained in their policy. And understand that evacuation order provision in those policies is there to protect the company, not for the benefit of their policyholders. It's put there in the effort to keep folks who are a policyholder and see a hurricane approaching and say in Lake Charles, if it's heading to New Orleans, hey, we can go to the beach for the weekend and send the bill to our insurer because there's a hurricane headed our way. The truth is that provision was there, put there for that reason. Allstate said we're going to waive that requirement and pay those evacuation expenses for our policyholders, and we ask you as commissioner to ask the rest of the industry to do the same thing. We were having daily calls, the governor was, with his cabinet and himself and the statewide elected officials from the couple days before Ida made landfall through the aftermath. And I was told the day after Allstate asked me to make that plea to the industry that the president was coming to Laplace and that he would make the plea as well. So I held up, waited until he came, and he used some language I would not have, saying that he would urge the insurance companies not to hide behind the small print in their policies and to do the right thing by their policyholders. And with that, I did issue a request, a bulletin, asking insurers to do the same thing that Allstate was doing and that the president had urged. And in fact, many, USAA, AIG, and others, had already started on a voluntary basis doing that same thing. I got told on a call on Saturday morning that after the president's visit on Thursday, that State Farm wanted to have a phone call with me on Monday morning, Labor Day morning. I was actually at my daughter's house in Metairie. She has a generator, I do not. And so I took the call in my son-in-law's office in his home. And when I came out of the room, which I had closed the door for, my daughter said, "That didn't go very well." I said, "No, it didn't." And you could tell from the kitchen. And she said, "Yes, I heard your end of it, at least." And so then I pivoted from issuing a bulletin. I actually had already issued the bulletin asking all the companies to a Tuesday morning meeting with my staff, recognizing the limitation on my authority to do what I did. As I recalled from 15 years earlier, when I ordered the companies to extend their prescription period, the statutory prescription period that was 1 year in Louisiana, to file suit for a homeowner's claim that we had 1 million of in the aftermath of Katrina and Rita. And when I issued the order to the companies to extend it to 2 years, and they can do that, could do that, can do that in any case voluntarily, but my authority to order them to do it was problematic. And I was asked by a member of the press, I forget who, what are you going to do if they don't obey? And I said in answer, we'll cross that bridge when we get to it. And I said to myself, what are you going to do, Donelon, if they don't obey? I extended the deadline once, and on the second to last day, the fax machine, remember those, started lighting up with voluntary extensions from 1 year to 2 years of that prescription period. Ultimately, the legislature passed the bill making it retroactive. The Supreme Court held a Friday afternoon hearing on short notice, gave 24 hours for rehearing, and then blessed the constitutionality of that action. In this case, the administrative law judge ruled against me, and in doing so said that my directive shocked his conscience, which I had little disagreement with his ruling. I knew it was a close call. I have serious disagreement with a career defense lawyer for State Farm opining that it shocked his conscience that I would order State Farm to do such a thing. But it is what it is, and we fought the battle. And I do take pride in the fact that only a handful of companies, to my knowledge, took the position that State Farm and Farm Bureau took in challenging us. The rest of the industry, and that's probably 100 insurers, complied in compliance with my my directive. Churning of adjusters was also a very, very loud complaint from all over Southwest Louisiana in the aftermath of Laura, and Central and Southeast Louisiana after Hurricane Ida. Many times 3 and 4 adjusters in the first couple of months. Looking around for other states that might have addressed this issue, we did come across a bill a law in California limiting the churning of adjusters, probably as a result, the law has been on the books, I believe, for just 3 or 4 years, of their experience with wildfires and the spread of resources that companies face in events such as hailstorms, wildfires, and hurricanes to handle the influx of additional claims volume that comes with. So what California does, and we have put into law to require our companies to do, is on the 3rd adjuster within a 6-month period of time, they must reach out to the policyholder, giving that policyholder not only the name of their new adjuster and contact information, but the supervisor of that new adjuster, contact information, and a copy of all documents accumulated by the first 3 adjusters up until that point in the adjustment process. It has worked well, my understanding is, from California, and we are hopeful that it will address the issue we faced in the aftermath of Laura, and then a year and a day later, Ida. Louisiana Fortify Homes program. This one isn't going to help us this hurricane season, or even the one after that, or the one after that. This is a long-range effort to address our incredibly large vulnerability to hurricane events. I say we're the bullseye of hurricane targets. My chief actuary, when I asked her in the aftermath of Ida to do an analysis of the last 100 years of hurricane landfalls for Louisiana, Texas, and Florida, and give me a head count on a per capita basis of the landfalls made in each of those 3 states. And what I anticipated turned out to be the case. We are 4 times more often hit on a per capita basis than Florida or Texas, 4 times more often on a per head basis in Louisiana over the past 100 years. And I tell folks, when Ida cleared Cuba and entered the Gulf of Mexico. I watched those things, as you might imagine, closely. And the Weather Channel put out their first cone of probability. And it stretched from the Sabine River on the west to the Pearl River on the east. Crossed the Gulf in the next several days and never wobbled, never left the Sabine to the Pearl. And in fact, hit us right in the middle of our coast at Port Fourchon. And as you probably know, with 150-mile-an-hour winds, just as Laura had brought to downtown Lake Charles the year before. The second and third, or second all-time most powerful hurricane to hit our state. Second, the Weather Channel says, to the last island hurricane of 1856, which was a true Category 5, 156 mile per hour wind speeds. Ours is a very high Category 4 for Laura and Ida, but significantly much more powerful than the winds that Katrina brought with it to first landfall at Buras and second landfall at the state line with Mississippi, with winds of 115 miles per hour, which, by the way, we had the year before when Hurricane Zeta came through New Orleans. And for the first time in my life, my wife and I went outside and walked around our property to see what the first half of a hurricane had done during the eye wall passing over, and then got back in and hunkered down for the remainder of that hurricane event, which brought with it winds as powerful as Katrina had, which we did not anticipate. But we copied the Louisiana Fortifying Homes program from a similar program that's been in place for 10 years in Alabama, starting with Baldwin and Mobile counties and now spreading through the center of the state. And thousands of homeowners have received $5,000 grants from the state to upgrade or to build new roofs on their property to the standards of the Fortify model. North Carolina has started out in the Outer Banks. It's a couple of years into theirs. South Carolina, like us, has just passed legislation to copy it. What it does basically is it strengthens the roof, and it does it in two primary ways. The screws or nails are stronger, larger, and more wind resistant than the typical nail guns that I heard all over my neighborhood walking the neighborhood in the aftermath of Ida. Even heard it on my own house in the aftermath of Ida. The second thing it does is require a secondary barrier, and that is very important as well. For those shingles that do get blown off, they now have something, think duct tape, that is required to be put with inspections as the roof is being constructed by certified inspectors, that tape the seal or the crack between the sheets of plywood that are the decking on a roof, and that those cracks or those points of coming together are prone and have been known to leak when the shingles blow off, and that produces water inside of the home, which produces mold in the aftermath with power out for extended period of times. So those are just a couple of the things we did. We have other bills as well, including the one that I want to talk to the governor about. That's a copy of what we did in the aftermath of Katrina and Rita under the leadership of then Governor Blanco, who, due to her unanticipated surge of revenue, producing surpluses in state government and local governments, but for her purposes, unanticipated surpluses in state revenues from sales tax revenue, income tax revenue, from the $23.3 billion in insurance payments that were made to victims of Katrina, $3.3 billion more to insured policyholders by Hurricane Rita, $16 billion of payments to flood-insured property owners from the floods that came with Rita and Katrina, not to mention the $15 billion of improved levees in the Metro New Orleans area, the $5 billion to rebuild the New Orleans to Slidell Bridge, and billions and billions of other dollars that were sent by the federal government to Louisiana through FEMA for the rebuild of schools, hospitals, government buildings, et cetera, et cetera. So she contacted me at the time and worked with Lobby, I believe, at the time, and the Big I, independent insurance agents, to develop the Louisiana Insurance Incentive Program, offering grants to companies that would come to our market to write in coastal areas. 50% of your writings had to be below, had to be to GOSEP. What are the definition? It was called GO zone parishes that had been declared in the aftermath of Katrina and Rita, and also to write out of citizens' policies. And we discussed going into the session whether we should try to replicate that program legislatively. Finally decided we would. It passed, but with no funding. And so now we are asking for an audience with the governor and the leadership of the legislature in hopes of getting funds to help with the challenges that now 100,000 folks have had to resort to the market of last resort, Citizens, to get coverage. I shouldn't say 100,000. There were 50,000 policies in Citizens before Laura and Katrina and Ida, and there are now 100,000 of those policies as a result of the 6 companies that went insolvent. 3 of them domiciled in Louisiana as a result of their Ida losses, and 3 domiciled, 2 in Florida and 1 in the District of Columbia for other reasons. Actually, the one in the District of Columbia went insolvent as a result of its losses from Ida as well. So that's where we are. That's what we've done. I'd be happy to open it to questions from any of you who would like to. And I'll repeat the questions, John, when they're asked. Please.
So the bill that has the companies increase their capital to help them to that $10 million, would there also be interest in legislation to make sure that they have enough reinsurance as well? Would you be in support of legislation like that?
I would be in support of it. The problem is in the implementation, because on my way out, I asked, my way in this morning actually, I asked my Deputy Commissioner for Solvency to tell me what the rating, the insurer rating, AM Best or something, another company called Demotech, housed in Florida, what the rating of the 6 companies that failed was when they failed. And all 6 were rated by Demotech A, exceptional, 6 out of 6. And we don't have the resources to better regulate the reinsurance buys that are made every spring leading up to the hurricane season starting June 1. We're talking about that, looking into that to better monitor the companies. I haven't documented it yet, but I'm told that all 6 of them bought from the CAT modeler. CAT modelers are something relatively new, 25 years around, and what it does for insurance companies is, and they use it to justify their rates, their actuarial justification is very dependent, below I-10, I-12, on their CAT model evaluation of their book of business. How old is the book of business, the homes that they insure? Where is it located? Closer to I-10. The market is not nearly as hard in Baton Rouge as it is in Slidell. Much more vulnerable and therefore harder to get coverage from the private sector. So for us to monitor that would be a huge expansion of our ability. Right now, we monitor their financials. We get it for any company domiciled in our state. 3 of the failed were domiciled in our state. we get their year-end financials. We evaluate that. Statutorily, we have to go in a minimum of every 5 years and audit their books. We evaluate their what's called risk-based capital. The more policies you write, the more reserves you have to protect those policy holders. We analyze that. We look at their best rating or Demotech rating as a factor also. And one of the failed companies we had put into conservatorship just 6 months before it failed, 6 months before the hurricane, and then 9 months later it failed. But they went out into the private sector while under conservatorship and generated another $47 million in capital to put into their company. That brought their total contribution over the 3 years before Ida up to $130 million that they had put in. But they fell short with their reinsurance by over $100 million even after the infusion of that $47 million. So it's a huge undertaking. 6 out of the 6 companies that failed, I'm told, haven't confirmed this yet, bought reinsurance based upon the most liberal of those 3 cat modeling companies, AIR, RMS, and CoreLogic. And they paid the price, ultimately.
And
Yeah.
also following up on that, do you believe that the $10 million that would be required, if those companies that went under had that $10 million at the time of Ida, would they have still gone under? And there's also a concern of that limiting those who can start here in Louisiana for the first time.
Sorry, I didn't do it the last time. I will this time. The question is, would the $10 million have kept those companies from going under? And the answer to that is clearly no. The companies, all 6 of them were $100 million short or more. And so 10 million would not have made a difference. Our hope is, and we knew that when we introduced the bill, our hope is that it will make them more conservative when they go to the market, the reinsurance market, and buy their reinsurance and know that they have $10 million at risk as well if they don't buy an adequate amount of reinsurance. That's the theory in Florida, and it's the theory with us as well. Yes, sir.
Just to make sure we're all clear, could you just reiterate kind of the crisis that you opened your remark?
Sure.
Excuse me. Precisely what the crisis is and exactly what you're asking the governor.
Yes, absolutely. The crisis is in affordability of insurance. And when 50,000 folks lost their coverage with these failed companies, they had to resort to the market of last resort. And it is the most expensive, by law, insurer in the state, designed to be so that it doesn't become a market of choice. As bad as our crisis is, the crisis in Florida is truly worse than ours. And it's as a result of a political decision that was made some 15 years ago to flip the Florida citizens from a market of last resort to a market of choice by lowering by 25% across the state the cost of citizens' policies. Their book of business ballooned to, by the way, I didn't repeat the question, sorry about that. It ballooned to 1.5 million. And they've been trying for 15 years to get it back down to a manageable level. And it got down to 600,000, I think. But in the aftermath of the failed companies that we are impacted by as well, it's back up to 900,000 policies and heading north rather than south. So what we are asking is the governor and the legislative leaders to do what we did very successfully after Katrina and Rita and give grants. Governor Blanco offered $100 million from her surplus money that I mentioned earlier, and only 29 million of that was accessed by 5 companies that came to our state to write property insurance new to our state. And we were pleased to have that, but we said, well, let's try it again. We offered the remaining 71 million 2 more times and had no additional takers. But what it did, in my words, is it primed the pump, and it got notice around the insurance world, which is truly a global marketplace. Reinsurance is located 2/3 of it offshore from the U.S. in places like Bermuda, London, Zurich, Toronto, Paris, you name it. And that market is how we spread our coastal exposure with these small regional companies like Americas that was domiciled for, they'll say it was domiciled in the District of Columbia because of our very high premium taxes in Louisiana. And we, companies that do business in multiple states from Louisiana, pay a retaliatory tax in states with a lower tax when they do business outside of Louisiana. And they said they wanted to go into other states, and so redomesticated themselves from Louisiana to the District of Columbia for that reason. And Americas down on Poydras Street in their office had 24 employees. And other small companies, probably the bulk of these 6 that failed, were similarly, some would call them glorified third-party administrators, TPAs, because their staff, their reinsurance, their adjuster capability, their actuarial capability is all contract done and provided to them by contract services. And but their risk is borne by those reinsurers spread around the world. We don't have enough North Louisiana business to adequately and affordably spread the risk that we have every hurricane season. Evidence, the last 2 hurricane seasons have cost insurers, really reinsurers, $23.7 billion for 800,000 claims that have been filed as a result of the hurricanes the last 2 years. So what we attracted with the incentive program before were companies that were required, in order to earn that $29 million that we offered them in grants, they had to write out of Citizens and they had to write in go-zone parishes in order to meet the requirements of that program. And in fact, we clawed back a couple of $1 million from one of the companies. I think it was actually it was the only domestic company located at the time in Opelousas that had some shortfall in the requirements for writing that we at the department were charged with monitoring, and clawed back some of the money from them. The other 4 companies all met the writing requirements. So we're hoping, we have the legislation in place without funding to replicate that incentive for companies to come write business in coastal parishes and specifically out of Citizens, to get it back down to the 35,000, 40,000 range that it was before Laura hit 2 years ago.
Do you have a target of how much you need for this grant program? And do you have an idea of where the money might come from, given that this year's budgeting process is on?
The process is over. We were told, come back in December with a BA7, that we expect there'll be more funds available, as happened after Katrina and Rita, as part of the rebuild, that money being spent in the rebuild after disasters. And so we are hopeful that when we get to that BA7, there'll be money available that will be able to offer grants to companies to come write. I will tell you that the first company that failed actually between Laura and Ida, and had nothing to do with either one of those hurricanes. It was a Florida-based company called Gulfstream that was the 9,000 Louisiana policies that they had were assumed seamlessly by another Florida company called Centauri. And I had approved it before their failure for that transition. But when Florida put them in liquidation, I was given another opportunity to approve or disapprove that transition. I said, I'm good with it. Centauri's fine, and I reaffirmed my approval. And those 9,000 policyholders transitioned seamlessly to Centauri. Along came State National, Access Home, and Americas. All three failed at the same time, leaving 54,000 policies behind. Along came a company that had a tiny book of business in Louisiana called SafePoint, a solvent company with year-end statement last year of $40 million in capital and surplus, headquartered in Miami, Florida. They said to our receiver, we want all 54,000 policies. We said, wow. They said, same terms and conditions, and we will voluntarily grant these policyholders that have been with the failed company more than 3 years that protected status on our own. We've done that with failed companies in the past. We said, great. Those, I dare say the majority of those 54,000 people never knew they had a change in company. It was that seamless. Then came Lighthouse with 30,000 policies. And it got later into the reinsurance year, closer to the hurricane season. And Centauri, the company that took over Gulfstream's policies, SafePoint, and a third company indicated to our receiver that they wanted 5,000 for one, 10,000 for another, and 15,000 for the third of the 30,000 policies, all of them on a Friday night. The first 30 days we gave for RFPs got no takers. We extended it 1 week and got 3 takers for the whole book of business. I got a call that evening when I returned, when I got back from dinner that Friday night, and my reply was, wow. And my chief of staff, who's been with the department forever, said the exact same things when I told her Monday morning. Wow. Unfortunately, before they signed the documents, they noticed our incentive bill. And it's my opinion that they said, why should we take these policies out of Citizens for free or keep them from going into Citizens for free if the state will pay us to do it in the near future? And I had a call last week with one of those companies inquiring on the status of the incentive program, and have heard from the other one of the other 2 companies actually inquiring as we go. So that's what I mentioned earlier, best of intentions in the legislative session. At this point, I wish we hadn't done it and had just waited to do it next year when the situation was even more critical.
And you said last time around you had 29 million. Would that be
out of 100?
Neighborhood would be
I actually, my own little back of an envelope, I would adjust that for the CPI since then and ask for that. That's as much as, Lanny?
Since when you talk about the more liberal of the cat models,
We're not talking political liberal.
yeah,
We're talking responsible,
perhaps riskier.
riskier.
At some point, is Louisiana going to be redlined for homeowners insurance and reinsurance policies from the international reinsurance?
I am concerned about that, honestly. The question is, are we going to be redlined by the reinsurance world for property insurance policies in our state? And my answer is yes, I'm concerned. No, I can't say yes. My answer is I'm very concerned about that. And one of the issues that I've heard, word of mouth, is that they are not happy in the reinsurance world with an effort that one of our failed companies made to get an additional layer of reinsurance payments for a hurricane, was it Francis, or a tropical storm, named storm, that made landfall, I'm told, in Texas and came through Louisiana unnoticed, but was trying to get a second tranche of money for their shortfall. That's problematic, but frankly, more problematic is our loss experience as a result of the 2 recent hurricanes. Having said that, I emphasize, we went 5 years, you can really say 15 years, with relatively quiet hurricane seasons after Katrina and Rita. The last 5, none. It resulted in our rates going up for homeowners just 1% per year for each of the last of the 5 years up until this year, when they went up statewide 6.7%, driven primarily by the increased cost of reinsurance. But those folks, those reinsurers, have been paying those bills, 23.3, 23.7 billion for Laura, Delta, Zeta, and Ida over the past year and a half. And that level of expense is problematic. Having said that, they're in the risk business, they're in the insurance business, and the price will go up for sure based upon the cost of reinsurance, but the industry will come back to that market ultimately, no doubt about it. And I see I'm getting waved, but one more?
For people who lost their insurance, what do you recommend that they do right now?
Well, first and foremost, they need to shop, because depending on where they are, I talked to a consumer this morning in Abbeville who moved from one of the failed companies, the same one I was insured for the last 10 years, Southern Fidelity, to an Allstate company in Abbeville. So there are alternatives available out there. They are hard to find, i.e. 50,000 folks have had to resort to the residual market of Citizens. But they have 60 days from the day the cancellation of their policy by their failed company. For Lighthouse and for Mason, that didn't fail, just got out of the business because they couldn't buy reinsurance. And then Southern Fidelity, that failed in Florida, they have 60 days from that cancellation date. The Mason and Lighthouse, it's June 30th. And for Southern Fidelity, it's July 15th. 60 days from that date to get coverage in the private sector. If they want, at any point in those 60 days, they can get a policy from Citizens retroactive back to the date of their cancellation. Even if we have a hurricane and their roof is blown off, Citizens will be on the hook for that loss, retroactive even after the event happens, up to that 60 days. We were able to do that to relieve the pressure on those 80,000, I think it was, policyholders all at one time scrambling to get coverage through their agents. And that was really a godsend to those folks. But the short answer to your question is they should shop around. There are alternatives available, and certainly Citizens by law is the least desirable because of the requirement that it be priced above the available private sector. Thank you all. I appreciate it. Let me know if I can answer any further.